Before we get into it, if you enjoyed these videos, please hit the like and subscribe button, and keep in mind that these are my own thoughts, opinions, and ideas. These are not meant to be, nor should you take them as, investment or trading advice in any way, shape, or form. Do your own due diligence, put in the work for yourself, and make your decisions based on that.
All right, folks, here we are on Monday, February 24th. We're going to take a look at HIMS today. So HIMS has earnings that are coming up pretty soon. I'm recording this video about 4 minutes before market close, and I didn't want to get too bogged down in the chaos that could that could be HIMS in the after hours today. I think the implied move is something around 14% or what? 17% per tip ranks. So yeah, that could be something. But I first wanted to get into some of the data that's out there and then look at the levels, and we'll kind of call it a video. But the levels, good thing we have the span that we have, because it might come into play quite extensively if it hits something like that 17% implied move. Now, the last two videos that I put out on HIMS, I feel like we've had a good sort of finger on the pulse. This was a month ago, and I said, is HIMS stock ready to hit new all-time highs? Well, where do we find ourselves? Let's zoom on out. There you go. Here's the monthly chart. Looks like all-time highs to me. So good call there. And then we bring that back up. The more recent one, 10 days ago, is HIMS and hers the next target for short sellers. And there it was just pure speculation. It was just like, hey, I feel like I've kind of seen this movie before. This feels like it could very easily become a target for short sellers. And today I took a look, and here's what we find with the recent drawdown. This is from iBorrowDesk. And so this is earlier in the day. You see this is from the 18th. Right? And then this is from the 24th. So we're spanning a period of time here. But from the 18th, we have 6.5 million shares available to borrow, up to 6.7 million available to borrow. And then today, as we're getting late in the day, right? This is the 3:45 p.m. On today, February 24th, 3.7 million available. So millions and millions of shares just getting captured by iBorrowDesk are coming out to short HIMS, unless for some reason there's millions that just aren't available to be lent anymore, but it's not because they've been borrowed. Maybe. But typically this is what we look for in order to try to gauge as best we can in real time, which can just be difficult. Try to gauge where are the shorts going. And so if we just take that metric with that sort of disclaimer or caveat that, yeah, maybe some large holders declined to allow their shares to be borrowed for short sellers. So if that's the case, then that's something different. But if this is just short sellers coming in to borrow more shares in order to short the stock, then it would appear as though, on the 18th at open, there was 6.7 million, and now there's 3.7 million. So 3 million more have gone out the door. You see it's continued to tick downward throughout the day. Tick downward in available shares means, tick upward in the amount that are being shorted. So so maybe we see sort of that coming to fruition. We certainly saw the all-time highs came to fruition, and now, will we see that, speculation of short sellers wanting to come in to attack HIMS? Are we seeing that starting to play out now? Maybe. The fee. So let's talk here about the factors that I look for when combating the short sellers. And of course, the big hubbub a few years ago was all about short squeeze, right? Like GME was going to short squeeze, or did short squeeze, and AMC is going to gamma squeeze and short squeeze. So what I look for is low available short shares. But what I mean by low available shares is something in like ideally tens of thousands, maybe 100,000-ish. So there's a ways to go there, which means there would be more pressure exerted before it were to get into that range. And then this fee really needs to be high double digits, ideally solidly in the triple digits. And then the third factor is the price needs to be moving upward. We see a little bit upward today, but even this steady climb upward, would be pretty convincing, I think, in order to try to set off a short squeeze. It's very, very hard to do. That's what was annoying about all the the hubbub, as I say, that it got a few years ago was it sort of made it sound like it's just an easy thing to do, right? But that's not the case. You really need a heavy fee. So these borrowers, these short sellers are paying a really intense fee to borrow these shares, and they are just eating that every single day. And then you need a low amount of available shares. So they can't really continue to borrow very freely because not only is the fee high, but there's just not that many shares available left to borrow. Then it gets pretty sticky. They sort of backed into a corner. And then if the price is moving against them, they're losing money that way, right? Sort of unrealized money, but in an unrealized sense, they're losing that money. In a very realized sense, they're losing the fee money. And then they're backed into a corner because there's not really many shares left to borrow. And so they can't really sort of, I'm going to put this in heavy air quotes, but dollar cost average themselves out of a bad situation, right? So it ends up putting them in a real pickle. And that's when you can see this flurry of buying back shares set off at a higher price, that therefore, those short sellers locking in those losses, and potentially, if there's enough of them in a short period of time, setting off something like a short squeeze, gamma squeeze, both. But it's definitely seems to be in motion to me. So it could be quite interesting in the coming weeks, especially depending, what this reaction is to earnings. Now, the levels have been holding up really well. If we just zoom in here, you can see day after day, even on big days, right? This is a 10-minute candle that dropped over 13%, and still it dropped from a few pennies above our 72.71 level, and it dropped just below our 59.63 level. It bounced right off 59.63 here, bounced, within pennies again off of this 72.21 level, and it has just been bouncing, even in areas where there's large percentage gaps, here and here, and even to an extent here. It's respecting the levels really well in both directions. I'm very, very pleased with how this chart has held up. I mean, again, even on a dip here, intraday today, that comes within 26 cents of the level that we have down there, right? After just sort of bleeding downward, and bang, shoots down in the morning and bounces within 26 cents of that level, works through all these levels, and where does it hit resistance? 51.85, right? It comes back down and tries to settle 49.45, right? So the levels are just holding up incredibly well. So I'm hoping that continues to be the case, even if there is a huge reaction to earnings here. Maybe not. It may extend too far above, too far below. But if that's the case, we can always come in and sort of button things up, clean things up, I should say, and reassess. Dip-wise, for the time being, to me, it looks like a healthy-ish pullback. No bearish crossovers on the short-term EMAs yet. Still situated well above the 183 EMA. It could be good or bad, depending on on this reaction to earnings. But trying to find solid support right along the 21 EMA. Hasn't yet made contact with the 34. Has shown signs of wanting to, sort of resist dipping that far. That strong wick up ahead of reaching the 34 EMA, gives initial signs that there's the potential for more bullish momentum that may want to be exhausted here. I'm not saying it's going to exhaust and reach 73 and set another new all-time high, but a steady there's plenty of percentage gain to be had from 51, even if you don't reach all-time highs again, and have another sort of second exhaustive bullish movement there. So we'll see if that, like I say, if that can continue to hold. But if there weren't earnings happening right now, this would look, at the moment at least, to me, to have strong potential for another go. Like I said, that second go, that next go, if it does not mean that it has to reach an all-time high again. It just did like 4 days ago, right? So there's this gap here. Obviously, it would fill that gap at like 59.60. It would get into it at about 57.37. So just keep that in mind as well. Volume-wise, again, a lot is just getting filled in here, right? Because it's all-time highs, right? So of course the action is going to be thin, but some decent shelving starting to accumulate along these levels. But to me, there's more unknown there than known. So I'm not going to place a ton on that at the moment. Huge large-scale orders coming out on the 19th. Not sure what that was all about, and sort of a little bit of trickling in recently, but certainly nothing outpacing, that big dump that happened on the 19th for whatever reason. I don't know if this is true, this position cost distribution. Also, this was only updated as of the 21st, but somehow Webull has only 6.26% total profited shares, which would mean just everyone was buying up here. Maybe that's the case. I don't know. I suppose maybe folks who previously had accumulated here and then it moved into there sold off, so the current holders are all situated up here. Maybe, but I don't know. It looks a little odd to me, but maybe the thing I just said is true. It can be hard to trust the data sometimes because it seems sort of askew, right? Something sort of nearish or recently at all-time highs, and you have almost 95% of holders at a loss. Seems weird, but maybe. You see some motion coming in here now. It doesn't necessarily mean that this is the move, but we've seen it before, right? Oh, well, look how these levels are holding up. My goodness, is that to the penny? The low there, 46.99. So within a few pennies again. And even here, within a few pennies, popped up to 55, 27 cents away. So we'll see. It had a pop up, and now it's getting a strong dip down. I mean, it's a lot to sustain, right? Even if you have an on par or expected earnings, not to mention if it misses, right? That could be a disaster if this misses in a meaningful way, or maybe even not in a meaningful way. I mean, having climbed from 24 back in January of this very year, so within a few weeks to have this climb, if you're going to miss in earnings, it could be really, really disastrous. And even something on par, if it's not seen as warranting the recent climb, even though it's pulled back quite a bit, if it's not seen to warrant a doubling of the price from $24 that you could have bought it for in January, then yeah, you're going to get absolutely taken to the cleaners. That looks like what's happening at the moment. I don't know exactly what the news is. This hasn't updated yet. Yeah. So on the think or swim side of things, nothing much to touch on here. We do see it pulling back into the channel and making contact again, which is always interesting. We still have a strong green bullish wave cloud here, so we'll see if that starts to get a little pointy, a little bit like a dolphin's snout or a dolphin nose, then, it might get a little concerning. Certainly, whatever the reaction is at the moment, it's seeming like it is going to be pretty outsized. And so if that's the case, it's going to really sort of rejigger how a bunch of these things look. So, so that'll be interesting. But yeah, it's definitely getting pushed down, but there are periodically some buyers stepping in at these different levels. We'll see. It's battling with our 44.07 level at the moment. If it loses that, we just have 39.27, which, again, if it is going to have this like 17% dip, it's getting close, but it's not quite there yet. So 39 might hold. I don't know. We'll see. Just because it says implied move of 17% doesn't mean it can't have like whatever that atrocious like Netflix earnings drop was that time. I can't even remember what that was. Was that like a 30-something% drop? Or yeah, but yeah, that's my take at the moment. I'm happy with these levels. So to the degree to which you want to sort of snapshot these and just keep an eye on them. These are holding well for the moment for my pair of eyes, at least. All right. In any case, I hope that your trading week is off to a good start. And as always, I appreciate you watching, and I will see you in the next video.